So, members, unfortunately, I've been struggling with the software that I've been using to record videos. So, unfortunately, I need to take the video recording part of my face off of these videos for now, whilst the guys get better at their own software. The reason why my face is significant in videos is because it builds trust and form of connection between obviously yourselves and myself, which just isn't there for the time being. And I don't want that to hold back the creation of this content. So I'm just going to continue in this format without my face and perhaps later on get back into it once they have a better piece of software. So today we're going to be talking about stop losing. All right. So the first module still. And we're going to be talking about a trader's discipline that one needs to acquire whilst on the markets. So let's expand that out and start from the top. What I'm finding quite often is traders are using the fact that markets are running 24/7 as an excuse to overtrade. Now, that's really bad for your portfolio, as you can run into a lot of losses by trading the market at the wrong times. And we'll get into that when we cover market structure. Another mistake that I see traders make when opening up too many trades or over trading is based on the lack of understanding from their end that the market will have energy and then it won't. So you'll see as we go forth that there is a principle that I call the calm before the storm or the calm after the storm. So when there is a sideward moving market, generally that is the kinetic energy building up in the market for there to be a major move. And after that major move, it normally balances itself out or calms down for a while. So with that said, there will be times of consolidation, which needs to happen to build up for the bigger moves. And my recommendation is to avoid that and know when that is. All right. So reduce the amount of trades that you're making, as once again, the markets aren't always tradable. So let's move on. In terms of planning your day, many guys will make the excuse that they don't have the time to trade. In reality, these are the same guys who are going to take a lot longer to get out of their current circumstances and make the markets their number one client. Okay. Until now, we've built up lives where we're obligated to everything else, namely day jobs and whatever commitments that you've made, which kind of makes you feel as if you can't trade. In truth, trading can take up to about 8 minutes of your time just to set up all of your charts and have a nicely prepared understanding of what the market is currently doing and what it's going to do next. So in terms of your obligation lifestyles, it's something that you need to break and something that you should be moving away from. All you need is about 8 minutes, jump onto the screens, set up the multiple frames, and allow the market to tell you when the next significant move is going to be, and then build it into your day. So what's important to acknowledge here is that the markets are telling you when the next move is going to be, instead of you trying to tell the markets when you can trade. Let the markets tell you, you don't tell the markets. So if you're someone with a day job and the only time you can really trade is at lunchtime, then you're not going to necessarily get ahead anytime soon when trading the markets, because by having a fixed amount of time to trade every day at lunchtime, it's not to say that the markets are going to do anything during that time. You can achieve financial freedom for sure with some planning and some preparation. All right. So make the time to trade. Don't hide behind excuses that you don't have the time. Because all you're really saying to me and others that you're saying that to is that you don't prioritize being financially free above the other stuff that's holding you back. Okay, so the next topic here is patience. Patience is quite a big problem for most, as it is something that is counterintuitive, right? I've got here, trading is unnatural for most, all right? And that's true because most actually don't know how the markets actually work, man. Like they don't even know the correct market structure. which is a massive problem again, of course, because if you don't know correct market structure, how are you ever meant to get ahead? So I've got you, if it were easy, everyone would be doing it, right? So when it comes to patience, it is unnatural. What I want you to do is spend time at mastering patience, as patience is one of the most valuable skills that a human being must master, especially with trading. If you're struggling with patience and struggling with mastering the skill of patience, speak up. We've got communities together for a reason. Too many aspiring traders don't share what their struggles are, and then they just remain in the background, just suffering by themselves. This is a awakening of a stronger version of yourself. There's no reason to suffer alone. So please reach out to us, reach out to the community, let others know what you're going through. And if you're struggling with patience and you're just getting it wrong and you're tripping up over your own feet, there's going to be guys who will show empathy and say, like, man, I've been there. I know how to get through that block, and this is how. All right. So if you're struggling with the skills, in particular, mastering the skill of patience, please reach out and get others to be a part of your trade journey. Next point is, most are overly caught up in immediate results as opposed to letting the forecasts play out. Now, I've been watching a lot of Warren Buffett content of late. It's somehow made its way onto my YouTube feed, and just listening in to how he succeeded. Man, like he just committed to the industry at a very young age and stuck with it, and just found out that if you have enough money and enough time, the stock market industry mostly will work for you. The trouble with that is that most people don't have enough money and they don't have enough time. Like Warren Buffett, he thinks about 10 years, 20 years, 30 years. Whereas the likes of yourselves, more than likely, are looking to get out of the rat race now. Okay, so you haven't got 10, 20, 30 years in mind. You're having maybe a few years at most to make that change. So the typical investment advice doesn't really ring true to you, but also there are many guys who are seeing this generational wealth change lives for certain crypto millionaires, and they want in on that action. Now, there's a fine balance between the two. Okay, so what I want you guys to get on top of is not expecting immediate results. We spoke about that in terms of your trade frequency. Allow the tools to do the work, and allow the forecasts to do their work. I've spent the last 5 years going through the pain and anguish of learning all the wrong ways to approach this industry, to come out the other end and take what works and make that into something that you guys can use to master the markets, right? So you don't necessarily need to go through what I've gone through to get my results. However, with that said, the tools that I've accrued and now sharing with you is something that will be best for you to trust in. So trust the process, trust the tools, and allow the tools to work for you. Ultimately, you want money to be working for you instead of you working for money. That's the whole bottom line here. So trust the tools and apply patience on your charts. The next thing we're going to be talking about here is loss, as loss is quite a difficult lesson to learn for any trader trying to succeed. All right, there's a lot attached to it. So let's get through the text and I'll use some examples thereafter. The emotions from a loss can demotivate a trader. I know that sounds super obvious. However, in the real world, it's a death rattle to those who want to be in trading for the long term. Many don't know how to deal when it comes to loss. It can create frustration and make you feel discouraged and disheartened, which is like this downward spiral that you would prefer to avoid, especially if you are making trading your career. And it separates the heart from the head. This is quite a significant point because many guys get into a trade, they experience a loss, which is a part of the journey. It's totally natural, like it's okay. And then their head gets clouded by emotions that is flooded in from their heart. So their emotions really deter their clarity and their focus and their correct decision making from happening, because it's all clouded from all these down feelings, these heavy feelings. It's super important that you learn how to get on top of that. When it comes to loss, what's really difficult to stomach is that the only person accountable for that loss is you. For those who have been able to duck and dive responsibility, for example, those of you who have got a job and a salary, and you kind of hide behind your manager, who would hide behind their boss, which hides behind, I don't know, whatever else, maybe business insurance or investors or something. Like, a lot of guys have been sheltered. And if they make a mistake, that's okay. They can blame it on the team or bounce back from it. But when it comes to trading, there's no pointing fingers anywhere else. It's 100% you. I mean, sure, you can make the excuse that you've been following someone else's signals, but evidently it still comes back to you for being weak enough not to put the time and effort into mastering the markets. So to a point where you've actually gone elsewhere for advice. I understand what is happening right now. Like, of course, you're learning from me, but the ultimate objective here is so that you are independent and don't rely on anyone else. So you learn from me to a point where you've got enough experience behind you that you can be absolutely independent. So what I don't want you to do is look at other people's results and then make that something that you follow, get into a loss, and then blame the world. Like, that's not the name of the game. But going back to the point, loss is a difficult situation to get through because, like I said, there's no blaming anyone else. And guys take it personally when a loss happens. Use loss as a opportunity to get better. Whilst you're learning the process, you need to allow that guilt to be cleared. You are going to have to make losses to learn how to not do things in the future. All right. So if you're being impulsive or impatient, or you're just revenge trading or doing dumb things, the losses are going to teach you what not to do. All right. And allow that guilt that you carry with you if you've made a loss of your own money, or if you said to your family, listen, we can't go away for the weekend because we don't necessarily have the money right now. And then you lose the equivalent of what that weekend would have cost in the markets. Like, that's going to really sting. So you have to learn how to release the frequency and energy of loss. Otherwise, you're going to carry that with you onto your next trade and probably set yourself up to fail again. So learn how to let go as quick as you can. Be kind to yourself. Many get too invested in the now, and when they're opening or have opened a trade, they focus on what it's like to have lost that money and how it'll impact their real world life and their family, instead of trust the tools, trust the process, and allow the market to bring the money to them. When it comes to discipline, be reasonable. I've spoken about some of this already. Trading is a journey. So on-ramp your success on the markets responsibly. If you are currently earning under $10,000 a month right now, do you think you'll be able to maintain, from a mental standpoint, like an emotional and mental standpoint, over $10,000 a month for the next month and the month after that and the month after that? This is a process. You have to be physically, mentally, emotionally fit to make the transition to the stronger version of yourself. And please don't expect it to just happen at the click of the finger, right? I've got you, don't let your end goal damage the journey it takes to get it. All right. So the journey is the destination, and the attachment to an outcome can be poisonous. So what am I saying here? Well, a lot of guys want to be financially free, or they want that extra money for their family, or they want to do good in the world and have the capital just magically appear in their wallet so they can spend it in their various ways or in which that they want to obviously make that impact from. And they have an attachment to the outcome. They're too invested in the now moment and the immediate results, as they're obviously very impatient and they want to jump out of their current circumstances. This isn't going to do well for you, because there is the longevity of this experience, which you heard we've been speaking about, that also needs to be a part of your reality. If you even get lucky up front, you could burn yourself out really quickly and lose most of your capital, and then battle to come back from that. So remember that this is a journey, and that you should expect mixed results. This is true to acquiring any new skill. All right. So just be reasonable, be kind to yourself, and realize that you'll get there eventually. Just don't give up, keep going, and it will happen. To close this segment off, it's just a reminder that we give you the tools. And this is some of what I've already said, but right here, you have the tools that very few others do. If you focus on the tools rather than price action, perhaps you'll be less emotionally affected by price action. So what I'm saying is that if you trust the tools and you trust your forecasts, you're going to be more emotionally stable to watch your open positions actually flourish to the optimum result. And in this, you're winning at the game. All right. So if you focus on the MTOPS laws, which will give you the highest probability outcome rather than chasing price around like a dog chasing a car, then you're going to come from a place of causality and come from a place of stability. And you will therefore be in control versus letting the markets push you around. And in support to that, again, I want to say you're one of the privileged few who are going to see the markets in their truth and use that as the power to anticipate its next move. So to end the section off, I want to say that a lot of the other kind of crypto experts, self-proclaimed experts out there will give tons of different shapes and a whole bunch of nonsense to kind of leave you confused. Our tools are like limited, right? So all you need to do is just use them enough times until it becomes second nature. There's a systematic approach, a step-by-step approach that you simply follow. Go down the MTOPS criterion, work out market structure, forecast time, see what the oscillator is doing, see what the price is for the near future, and use the support and resistance to bring that all together. You just do that on any time frame, on any market, enough times, just in that mechanism, you're going to, by default, be a success in this market. So use the tools. We're not going to keep piling on different options. What you've got will work. It has worked, and use it enough times, it'll work for you in the future. And I've designed it that way because anything more than this, you don't need. And that in itself is huge value. I've protected you against the time wasting and left you with what works so that you only need to do that and that on repeat to change your life. So don't take what you've got for granted. I think I've said a number of times in this session, really just focus on that alone, rinse, repeat, get the tools to work for you. And with that discipline, you'll stop losing and have the power to transition yourself into a life of freedom. All right, that's it for today's video. On to the next.